Before starting this balance sheet equation, let me tell you what is the meaning of assets. So till now, if you are not aware about it, so let's discuss it today. So assets are what? Assets, they represent resources owned or controlled by a business or an economic entity. Like you purchased your vehicle, so that is asset for you because you have control on that particular vehicle, of course. Or let's say you purchased one fridge, yes, or you purchased one land. You holds all the control, of course, yes. So basically, all the assets are those things on which you can say that this is mine. I am holding right. Suppose I purchase this pen. Now, that belongs to me, like how I want to use it. I want to use it for writing, or I want to throw it, or I want to break it. That is up to me. Why? Because I hold right. I hold control on this asset. And this is my asset. But if you are trying to break it, you need to compensate me. Yes, because you have destroyed my property. You have destroyed my asset. So that is the meaning of asset. So now organizations, businesses are purchasing land, building, machine, vehicles. That is assets. Now, coming to next, that is what are the types of asset do we have? So basically you can divide it into two parts. Fixed assets, current assets. Fixed assets, generally their life is more than 12 months. Yes, current assets, generally their life is less than 12 months. Fixed assets again subdivided into tangible, intangible assets. Tangible, which you can see, or you can say they have their physical existence. I can see my pen, this is tangible. You can see this board, that is tangible. Camera, tangible. Land, tangible. Building, tangible. They have their physical existence. Yes, so that is a tangible. Intangible, opposite of tangible. They do not have any existence. Like patents, copyright, trademark, yes, goodwill, brand value. Yes, it's like emotional activities, qualitative things. Yes, whereas if you can measure it, they have the quantitative values, you can see it, then that is tangible. On the other hand, current assets are what? They are having less than 12 months life. For example, cash, stock, debtors. Yes, so this is the classification you will be seeing in balance sheet under your assets. Next term which you need to remember, that is liabilities. Now, what are liabilities? Basically, this is your obligation. Yes, like you have obligation to pay tax. Yes, so that is liability. Suppose you have borrowed 15,000 from me. That is liability on you to repay me. Yes, so liability is what? That you have owed to any third person. You have taken bank loan. That is liability. Yes, because you need to repay it. Very simple definition. Again in this, we have two sort of classification. Long-term, current liability. Again same, long-term means for more than 12 months. Short-term or current liabilities less than 12 months. Yes, let's take one example. You have taken one car loan for 5 years. Means this liability you will see for next 5 years. So this is going to be long-term liabilities. Next, current liabilities. Let's say I borrowed 5,000 for 2 days. Yes, so this is going to be repaid within 12 months. So that is current liabilities. So liabilities are classified as long-term liabilities and current liabilities. Okay, chaliye. So till now we discussed about what is the meaning of assets, liabilities, and one more term which you need to remember, that is capital. Capital means Let's say here you want to start one company. Yes. Sorry. Now, when you want to start this company, let's say here is the owner. Okay. This is your Mr. J. Okay. Mr. J wants to start this company, and before starting it or while starting it, J will invest some amount. And as a owner, first you need to give your amount. Yes or no? So Jay said, okay, I have my FD, and in that FD, I have around 1 lakh rupees. So now Jay will invest that 1 lakh in this business. Jay said, I have extra laptop, let's use it for business. Jay said, I have one car, let's use it for business. So basically, this is going to be capital. Whatever amount invested by owner, that is capital. Remember this. So whatever amount your owner will invest, yes, that is going to be what? That is going to be capital. Okay. So now you understood these three terms which are very important for you. Assets, liabilities and capital. Now based on these three terms, you will be seeing balance sheet equation. Sorry. So first let's talk about what is the meaning of balance sheet. So balance sheet is a financial statement. Yes, balance sheet is what? This is a financial statement that summarizes a company's assets, liabilities and shareholders' equity. Yes, at a specific point in time. So basically, if we want to know about your financial position, whether you have sufficient assets, what are about your liabilities, what are your capital invested amount. If you want to know for any particular date, you will be preparing balance sheet. That is the reason balance sheet is usually prepared at the end of the period. Yes, this is about balance sheet. And what is the equation? Assets equal to liabilities plus capital. Now, why we are saying liabilities and capital same side? Because we have seen one concept, that is business entity concept. Now, as per this concept, we always say owner and business. They both are different. Hana? So, like your business is taking, amount from bank, that is liability. But when owner is giving the amount, that is also liability, but we are saying it as capital. Because there is one obligation on the company to repay it. Though owner is only starting the business. But because of this concept, business entity concept, you are going to bifurcate owners and company. And whatever amount given to the company by the owner, that is capital. Yes, and whatever amount company is taking from bank or from third party, that is liabilities. So always remember, capital, liabilities one side and assets on another side. So what is the equation? Assets equal to liabilities plus capital. Okay, chaliye. So this is about your assets, cash, bank, bills, debtors, stock, furniture, machinery, building. All these values should be equal to capital plus liabilities. If this is not equal, means assets are not equal to liabilities plus capital, means you have done some mistake, some error you have made. Yes. So if you want to prepare balance sheet, always try to make assets equal to liabilities and capital. Assets equal to LC. Yes, liabilities, capital, and these are your capital as well as liabilities. Now, let's solve few questions based on this. If a firm's assets are 8 lakh, liabilities 5 lakhs, what is the owner's equity? So what is the equation? Your equation says assets equal to liabilities plus capital. So assets are equal to 8 lakhs equal to liabilities 5 lakhs plus capital we need to calculate. Now with the basic simple maths, if you transfer 5 lakhs in your left side, it will be 8 lakhs minus 5 lakhs equal to capital. So capital is equal to 3 lakhs. Yes, so correct answer is answer B. Very easy. Yes. Now, let's see your next question. Accounting equation is what? What is the accounting equation here? Revenue equal to assets plus liabilities. Assets equal to liabilities plus capital. Liabilities equal to assets plus capital. Or capital equal to assets minus revenue. So when we started discussing about, discussion about balance sheet equation, we discussed only 3 terms. And what are these 3 terms? Assets, liabilities, and capital. We only discussed these 3 terms. Again, I am saying, what are these 3 terms? Assets, liabilities, and your capital. We never said, or I never said, that revenue is equal to anything. I never discussed anything related to revenue. Revenue means your income. That is your income. But I never discussed anything related to income. Yes, so what is the equation? Assets equal to liabilities plus capital. So right answer is answer B. Okay, chaliye. Coming to next question. Which of the following is not classified as an asset? Very simple, very easy. But remember, if you want to build your concepts, you need to start from these topics. Yes. Machinery, inventory, outstanding rent, cash at bank. Machinery, asset, inventory, stock, asset, cash, asset. Outstanding rent means, suppose every month you are paying on first, day of the month. Let's say this is your 1st January. You paid 5,000 for this whole month. Okay. This is your 1st February. Again, you need to pay 5,000 and you paid on this 1st Feb. Now, let's say this is your 1st March. Yes. You again paid 5,000 for which month? For, let's say, March month. Now, this is your 1st April. Okay. Now, you said I'm not going to pay, or I didn't receive salary till now. So, I'm not paying 5,000 now. This is now 1st May. Okay. So, till your May, you didn't pay that salary or that rent. So, this is going to be what? This April rent will become outstanding in the month of May. Yes, so right answer is answer C. This is your liability. This is not your asset. Okay, chaliye. Next, which of the following is not a component of a balance sheet? Assets, liabilities, shareholders, equity. So remember, shareholders, equity, capital. Basically, shareholders are owners of company. Okay. So you have assets equal to liabilities plus capital. Assets, liabilities, capital. Right answer of this question is answered C, that is revenue. Then next. Which of the following is an example of a current asset? Guess. Building equipment, accounts receivable, or goodwill. So in your module A, we already discussed about bills receivable, about debtors. So that is about accounts receivable. Building equipment, goodwill. You will be using it for more than 12 months. But accounts receivable, of course, within 12 months, because max to max, whatever you are giving goods on credit, you will try to recover it as soon as possible. And you cannot give credit terms for more than 90 days. So this is the point which you need to remember. And accounts receivable is classified as your current assets. Now, next. What does the equity section of balance sheet represent? A, the total liabilities of the company. B, the total revenue generated by the company. C, ownership interest of shareholders in the company. D, total assets minus total liabilities. So, what does the equity section of balance sheet represent? Total liabilities? No. Okay. Because under liabilities, you will be adding equity as well as other borrowings also. But single equity is not, showing total liabilities. Then this is your total revenue? No. Ownership interest of shareholders in the company or total assets minus total liabilities. Though to calculate equities, you will be using this formula, assets minus liabilities. But they're not asking about the formula. They're asking about what this equity represents. What is the meaning of equity? How to calculate? Of course, this is the formula. But what is the meaning of it? That is the ownership interest of shareholders in the company. Right answer is C. But how to calculate? You will be using this D. Okay. Final accounts. Now, what is the meaning of final accounts? See, final accounts you prepare after trial balance. Oh, but we cannot recall what is trial balance. No issues. Let's start from the very basic. When you identify your entries, you will start with the very first, primary book, that is journal. Yes, that is the first book. After journal, you prepare ledgers. Basically, you will classify into different accounts. After this journal, you will see third one, that is trial balance. I hope you can recall it, trial balance. Yes, in this you identify whether your debit is equal to credit or not. If it is not, then you will use this error identification and how to rectify it, that is. Yes, so these things you will be doing in trial balance. Now, after that you have your fourth step, that is your profit and loss account. Now, this profit and loss account you will see in today's session. And lastly, you will see balance sheet. Yes, in previous unit we covered balance sheet equation. So balance sheet equation already you know it, that is assets equal to liabilities plus capital. Now let's talk about profit and loss account. So profit and loss account talks about your profit earning that you have generated after selling your products, that revenue you have generated from the sale. So basically, let's take one example. If you are starting one business, let's say you are starting stationery business. So every day what you will sell? Furniture? No. Of course, stationery you will sell. So when you are purchasing all these stationeries, yes, notebooks, erasers, scales, everything, you will sell it. Are you going to sell for the same amount that you have purchased for 100 rupees and you will sell for 100 rupees? No. Of course, you are going to sell with some extra amount. You will add some profit in it. So let's say you purchase for 100 and you will sell this time for 120 rupees. So this 20 rupees is going to be what? Profit. Yes, and this profit you will learn under this profit and loss account. So basically in this particular unit, you will be talking about this P&L and this balance sheet. Yes, so final accounts include these two things. Yes, these two things. Now one more thing is there, that so many of you are from commerce background. So you can say, ma'am, here we have this trading account and P&L appropriation account. So where are they? Where you will classify that accounts? So let me tell you, when you talk about trading account, okay? When you talk about trading account, when you talk about P&L account, profit and loss account, and profit and loss appropriation account, all are subdivision of this P&L account. Yes, this profit and loss account. So remember, in your P&L account, you will classify into 3 subparts. Yes. Now this depends from business to business, from accountant to accountant, whether they want to prepare it or not. Directly they can prepare P&L account. If that management or that accountant want to classify in much better way that an accountant can classify in this subsections. So these are your few steps which you have completed till now, and now you need to start with final accounts. So let's start with the very first one, that is trading account. As I already told you, this trading account is a part of your final accounts only, part of your P&L accounts only. We are never classifying into separate heads. We have only two heads, P&L and balance sheet. Under P&L, you have sub-classification like trading, P&L, and then you have P&L appropriation. So what is trading account? Now, a trading account, this is a part of important component of final accounts. Now, why you are designing it, why you are using it? You are specifically designing it, you are using it for gross profit calculation or gross loss calculation. Basically, whatever business you are running, whatever your main business is, you will be using this trading account to calculate gross profit and gross loss from actual selling of your products. From actual whatever business we are doing. Let's take one more example. Suppose you are opening one bakery. So on daily basis, what you will sell? Of course, bakery items, sweets, breads, all these things. So when you are selling this, what profit you are generating when you are doing this regular business? How you will get this? With the help of gross profit and gross loss. Basically, you will get the gross profit and loss under your trading account. So what just we discussed now? So let me quickly summarize it. If you are doing any main business, like in bank, what is the main business? Are you selling furniture on daily basis? Are you selling computers on daily basis? Are you purchasing stationeries on daily business? What is your daily agenda? Of course, to take deposits and to sanction loans. So that thing I'm talking about, that is your main operation, that is your main business. So from that main business, what profit, what loss you have generated, how you will calculate? With the help of trading account. And when you are taking your operational, activities like selling, purchasing, manufacturing, from that you generate gross profit and gross loss. You will generate only one thing, profit or loss. And remember, this makes it core trading activities. Yes, like your banking activities, deposit, sanctioning of loan, that is your core trading activities. And it is a part of, see, this is not a separate head under your final account. This is a part of P&L account. Now, here you have an equation. Okay. Here you have an equation. First, let me tell you about this trading account. So what is the format of trading account? And remember, this format is very important when you are reading, okay, when you are doing this module B, yes, as well as when you will start with module C, ratios. In that also this, becomes very important because you have to calculate so many points from this. So let's start with the trading account format. So in trading account format, one side is of course going to be your debit side. Next side is going to be your credit side, as it is your T-shape account. Now, if you talk about debit side, you will record all your expenses. Yes, like you can see your purchase, yet direct expenses. Direct expenses means for purchasing that goods which you are selling, what expenses you have incurred, that you will subtract from here. And if you go from credit side, you will see you have sales, closing stock. Yes, whatever stock is left with you at the end of the year, that is your closing stock. Opening stock, when you start your 1st April, how much amount of goods you will carry forward, that is your opening stock. Yes, and after adjusting these two sides, either you will get gross profit or you will get gross loss. So this is about your you can say trading account. Yes, now let's solve few questions. First, the primary purpose of preparing trading account is to ascertain what? Net profit, net loss, gross profit, gross loss, financial position, or cash flow. What is your main agenda of preparing this trading account? Your main agenda is to calculate gross profit and gross loss. Yes, so correct answer is answer B. Next, which of the following items is typically shown on the credit side of the trading account? Yes, Opening stock, purchase, sales, wages. Okay, so which is your credit side? This is your debit side and this is your credit side. On your debit side, you have opening, purchase, direct expenses. Wages is again part of your direct expenses. But if you see your credit side, sales, closing stock, these are the items from your credit side. So opening, purchase, wages. Correct answer is answer C. That is sales. Okay. Now coming to one numerical question, and yes, from this topic they can ask numerical questions. Now these topics are not only important for your, you can say for JAIIB, this will help you in your CAIIB, this will help you if you're preparing for any, you can say, promotional exams, any interviews, any regulatory exams. This will help you in that calculations also. So make sure to remember it properly, to practice it properly now only. Okay, so let's start it. Given the following, opening stock 20,000, purchases 1,50,000, sales 2 lakh, closing stock 30,000. What is the gross profit? When you're starting initially, just prepare the T-shape account. This is your trading account. This side is your debit, this side is the credit. Now, opening stock, you will see debit side, purchase here, yes, sales here, and closing stock on this side. So opening stock 20,000, then you have purchases 1,50,000, yes, then sales you have 2 lakhs, and closing stock 30,000. So what is the gross profit? See, ultimately you need to make equal these two sides, debit equal to credit. So if you add your credit side, that is 2,30,000. And if you see here, this is 170, so maximum value will keep here, that is 230. So if you see balance on your debit side, yes, so basically this balance will give you gross profit. If the balance will come on your credit side, this will give you gross loss. So in this case, there is no gross loss, you have profit. To 230 minus 170. So what is the amount? Here you have 30 and then 30. So basically 60,000 is your gross profit. 7 plus 6, 13, 230. So right answer is gross profit. Answer is equal to 60,000. Okay, this is one way. This is one way. But in exam, every time you cannot prepare it. So how you can solve it? If you want to calculate gross profit, take opening stock plus purchases minus your sales plus closing stock. Debit side you are adding here, credit side you are subtracting here. So now if you subtracted closing side, that is 20,000 plus purchases, that is 1,50,000 minus 2,30,000. Yes, so this is going to be your 170. Okay, minus 2,30,000. Yes, so you can see here that your income, that your revenue is greater than your expenses. So this is going to be your 60,000. Yes, this is your 60,000. Basically, we generally write in this way. Okay, let me write in the correct format only. Otherwise, you will say this is minus 60,000. How it can be profit? Wait. So right way, closing stock plus your sales minus opening stock plus purchases. Take or any direct expenses if you have. So this is your 2,30,000 minus 1,70,000. Okay, so I think now you can understand that why we are subtracting closing side, debit side with your credit side. Yes, so answer is 60,000. This is one more way to solve it, or way. Okay, chaliye. Now coming to next question. Sales 5 lakh, purchases 3 lakh, opening stock 80,000, gross profit 1,50,000. What is the amount of closing stock? Here you need to calculate amount of closing stock. So how to calculate it? Again, let me tell you first with the T format. Yes, so this is a T format. This is a trading account, debit side, credit side. On your debit side, you have opening stock, purchase, direct expenses. Credit side, you have sales and closing stock. Okay, so if I write over here about 5 lakh sales, purchase 3 lakhs, opening stock 80,000, gross profit they are giving 1,50,000. Okay, so they are not giving any direct expenses, so let me remove it and let me write over here gross profit. And what is the missing data? That is 1,50,000. Yes, please try it once. Let's see whether you can calculate it or not. See, formula is the same only. Hana, you cannot change it. Only they will replace the values, they will change the values, and then you need to calculate it. So, what is the total amount? Let me calculate over here. So, this is 3 lakh plus 1,50,000 plus 80,000. So, which side is greater side? 5,30,000 on this side. Hana? Here you have 5,30,000. So, if you subtract 5,30,000 from 5 lakh, you will get 30,000. Okay, so this is your answer. Amount is equal to 30,000. Now in exam, you will not make this table, this T-shape account. I'm telling you this T-shape account so that you can remember for a longer period of time. In exam, we need to go with the tricks, how fast we can solve it. So basically, you have gross profit equal to closing stock plus sales minus opening stock plus purchases plus direct expenses. Yes. Now, closing stock is equal to your that is the missing figure. So let's say closing stock plus 5 lakhs minus you have 80,000. Purchases you have 3 lakhs plus direct expenses you have 1,50,000. So this is going to be your 1,50,000 plus 3 lakh plus 80,000. Same 5,30,000 will get in this. And here you will get gross profit also 1,50,000. And this side you have closing stock plus 5 lakhs. Okay. So if you shift here, you can see 5,30,000 plus. Oh, just a minute. Okay, already I have added there 1,50,000. Wait, let me remove it from this side. I have added it under, direct expenses. So this is your 3,80,000. Now, if you shift here, your negative sign will become positive sign. So 3,80,000 plus 1,50,000. Now it is 5,30,000 equal to closing stock plus 5 lakhs. So closing stock is equal to, if you take your plus sign to your next side, this will become negative. So closing stock is equal to 30,000. This is your answer. Yes, this is how we need to calculate gross profit or closing stock. If you know this formula, you can calculate any missing data. Yes. So I hope you understood how to calculate this. Okay. Now one more thing let me tell you before we proceed. That is your cost of goods sold. Okay. Now let me tell you what is cost of goods sold. So just now we saw one formula that says gross profit equal to closing stock plus your, you can say, sales minus opening stock plus your purchases plus direct expenses. If you subtract all your expenses from your revenue, from your sales, you will get gross profit. But now we are saying whatever goods you have sold. Suppose I am selling this pen to you for 120. So that is my sales amount. But for what amount I have purchased it? Let's say I purchased this pen which I have sold you. I purchased this pen for 100 rupees. Yes. So what is the cost of this good? What is the cost of this good? 100. And this is what COGS talks about. Cost of goods which are sold. I'm not talking about sale amount, that is 120. No, I'm talking about 100 rupee. Yes, that I have paid while purchasing. So whatever goods I'm selling to you, what is the cost of it? What is the purchase price of it? So how to calculate it? See, opening stock plus purchases plus expenses minus closing stock. From this, we are identifying that throughout the year, how many goods we have sold, and whatever goods we have sold, what is the cost of it? So how we will calculate it? Just remove the sales from your formula. Otherwise, everything is same. And opening stock, purchase expenses, this bracket is as it is. Minus closing stock. You need to remove only sales. If you remove sales and you calculate, that is cost of goods sold. That is not the goods I have sold to my customers. That is not the amount that I have generated. No, that is the amount I have paid for purchasing it. And that goods I have sold to the customers. So what is the cost of goods sold? That is opening stock plus purchase plus expense minus closing stock. This will give you cost of goods sold. So if I want to calculate gross profit, I will use sales minus COGS. Gross profit equal to sales minus COGS. This is about trading account. Okay, so here we complete our trading account. Now let me tell you quickly what is the meaning of profit and loss account. So what is the meaning of profit and loss account? So in profit and loss account, we also call it as income statement or statement of operations. And here we take all the expenses, all your revenue that you have generated apart from your, you can say, operating activities. This will give you final net profit, net loss. Yes. So this is your profit and loss one format. Again, this is T-shape. Debit side, you have all your salaries, rent, expenses, all your side. This side, credit side, you have interest received, commission received, discount received. Whatever profit you have generated from trading, you will carry forward in this account. Yes, gross profit, credit side, gross loss on your debit side. All your expenses you will show on this debit side. All your incomes you will show on your credit side apart from your operating business. Now, yes, so here you will calculate net profit or net loss. So, what is the main objective of preparing a profit and loss account? Financial position to determine? No, we are not talking about what is our financial position. This is given by balance sheet. Cash flow operations? Correct answer is, net profit, net loss of the business for an accounting period. So, correct answer is answer C. Okay. Gross profit we calculate from trading account. Now, which of the following items is typically shown on the debit side of the gross profit and loss account? Gross profit, discount received, rent paid, interest received. Debit side, I hope you remember your golden rules of accounting. As per nominal rule, yes, which rule we are following here? Nominal rule for preparing your profit and loss account. On your debit side, you will show all your expenses. On your credit side, you will show all your gains and incomes. Okay. So basically, they are asking about debit side. Expense, which is your expense here? Profit is your expense? No. Discount which you have received, how that will be expense for you? That is benefit for you, gain for you. Interest received, that is income. Right answer is interest paid. In this, first we will be learning about definition of company. What is the meaning of company? So, as per section 2, subsection 20, given under Companies Act 2013, they define companies as any company incorporated under this act or under any previous company law. Means if you see Companies Act 2013, yes, under this act means Companies Act 2013. If you are starting any company, you need to take registration. Yes, like you have your birthday, you are having birth certificate as a proof. Yes, you are Indian resident, so you have passport. So in this case also, when companies are saying that we are company, what is the proof? And for the proof, they need to take incorporation certificate. And how it will be, taken? By registering under Companies Act 2013. Means if you are forming now or after or on 13th, yes, 2013, you can register under this. But if you see, there are n number of companies who got registration before this 2013, so they were not considered as company. The answer is yes, they were considered as a company, and they need to take, registration under previous Companies Act. From time to time, these acts are updated. Huh? So this is our updated act which we are now following. So earlier act was there, but we are not following now. We are following this Companies Act 2013. So this is a definition which you need to remember. Yes. Now coming to next part. What are the features of company? Now these features are very important. You will see number of questions in your exam. So let's start with the very first one. That is incorporated, association. Incorporated association means you will take registration of your companies. You will take proof that yes, this is your company and no one can use this name for doing any business. Like if you say Reliance, yes, they got registration under Companies Old One Act. Okay? And here you can see they are also artificial person. Now why this is known as artificial person? Because easily you can do, any contract, any person can sue Reliance, Reliance can sue any person. That is the reason they are known as artificial person. They have all the right to enter into, different transactions, to sue anyone, to act as per the law. They are filing income tax, GST by their own name. Correct. So this is about incorporated association, which gives legal status. Yes, and they are also artificial person. Like you and me, we all are natural human being. But companies, they are artificial, but then also they have right to enter into act. Yes. So this is about your second feature. First is incorporated association, that they will get registration under Companies Act 2013. After that, next feature is artificial person, because of which they can, sue anyone, any third party can sue them. Correct. They can enter into any contract. So these are some features of your artificial person. Next, common seal. Common seal is like signature. Yes, seal, that is your signature. Correct. So this is about signature. So earlier, means before 2015, signature was compulsory thing. But after 2015 Amendment Act, this signature, common seal of the company is not mandatory in nature. That is now optional in nature. Yes, so how you will remember this? Common seal. Seal means signature. Now, next, that is separate legal status. Separate legal status is like your business entity concept. Yes, where business is separate and your owners are separate. Correct. As you can see here, if you talk about Reliance company, yes, who found Reliance company? Dhirubhai Ambani ji, but now he is no more with, So if you see companies now also, running and they are doing their business. So that means whether your owner is there or not, your company will continuously run. So that is what separate legal status. When you are doing any transaction with Reliance Industry, you will see their name, Reliance Industry name. You will not see their founder's name. Correct? Dhirubhai Ambani ji or Ambani's name. Why? Because of separate legal status. Correct? One more similar to this, we have separation of management and ownership. Owners are the founders of the company. Correct? Now, management, they are doing day-to-day activities. Owners are not doing day-to-day production. For that day-to-day production, for taking decisions and all, they are appointing, different, you can say, employees or different experts in the company. And that is what they're saying. Owners are different and management is your different thing. Coming to the next, that is limited liability. Limited liability means, let's say, suppose you are investing in Reliance company. Okay, you purchased shares of Reliance company by investing 20,000 rupees. Correct? What I'm saying here, you purchased 20,000 shares. Correct? Let's say now market is fallen. In that case, let's say now your 20,000 is equal to 1,000 rupees. And after that, company become bankrupt. So in this case, Reliance will come at your home for extra amount. For the bankruptcy amount, never. You will lose only 20,000 rupees. Yes, they will not at all going to recover apart from 20,000 from you. That is what limited liability. Whatever holding you are having in that company, yes, how much holding you have in that company, only that much liability you will get. Then next is transferability of shares. Means here, if you see a public company like stock exchange companies, anytime you can purchase, anytime you can sell. But if you talk about private companies, suppose you are starting one company, that will become private company. You won't get your listing on first day only, no? So you cannot transfer your shares, or no third party can easily purchase your shares. So that is the point in your transferability of shares. In this, you need to remember two things: public company and private company. In private company, transferability is restricted part. In public, you can easily transfer this shares. Okay, now coming to next one, that is perpetual succession. We will continue Reliance example only. As you can see here, Dhirubhai Ambani ji started Reliance company, but now he is no more. So even after their children actually, they are running this company, and after them, their grandchildren will run this company. So that is perpetual succession. Unless and until companies is legally winding up. If by the law you are going to wind it up, then only you can say our company is closing. Otherwise, your company will continuously run. That is because of perpetual succession. Now, coming to next, that is about membership. Yes, so for starting private company, you require minimum members, that is 2. Yes, maximum members in your private company, 200. In case of public company, if you want to start, that needs 7 and maximum infinite members. So this is about membership in case of private and public. Coming to next one, that is last one, minimum paid up capital. Earlier we used to have 1 lakh, 5 lakhs, but now there is no such requirement to start any company. So these are the features of our company. Let's repeat it once again. Incorporated association means your company will get some legal certificate that yes, this is my company and I'm going to run it. Artificial person, easily they can enter into any contract. Any third person can sue them, and they can also sue any third party. Then separate legal status, owners and company, both are different. Then separation of management from ownership. Owners are different, management is different. Then transferability of shares. In this you cover 2 points. Yes, first about public company, easily you can transfer. In case of private company, you have restrictions. There is no such easily transferability of shares. Then limited liability, up to the amount you have invested in the company, you are liable for that. Apart from that, you are not liable for any personal assets. Then common seal about signature. Earlier, means before 2015, common seal was mandatory, but now this is optional in nature. Perpetual succession, it's like going concern. Yes, going concern means your company will continue till law says to wind it up. Okay, membership and private you require 2, maximum 200. Public 7, maximum infinite members you can hold. Minimum paid up capital, earlier we used to have 5 lakhs, 1 lakh, but now there is no such requirement for companies. So these are the features if you are registering under Companies Act 2013. Now, next, this is again very important. Remember whether you are preparing for your JAIIB, CAIIB or for any regulatory body exams, even if you are preparing for any bank promotional exams, this topic is very important. Because they can ask this questions in your interview, they can ask this type of questions in your written test. So make sure you remember this points. Now, next we are going to talk about that is types of companies. Now, under this we will divide it into 3 parts. Okay. First, based on incorporation, next based on ownership, and third based on liabilities. So let's start with the very first bifurcation, based on incorporation. Yes, under this you have 4 types of classification: chartered company, statutory company, registered company, foreign company. Then next, based on ownership, private company, public, government, holding company. Based on liability, company limited by shares, limited by guarantee with unlimited liability. And last, subsidiary company. So let's start with the very first one, that is based on incorporation. Yes. So in this, let's start with the first one, that is chartered company. So let's talk about before independence. As you know, before independence in India, East India Company used to rule. Now that East India Company was a chartered company. Okay. Why? Because that was incorporated by the king or head of state. And here now you cannot see any East India Company. Yes. And all the powers and functions defined by that charter. Basically, before independence, East India Company, their kings, their emperors used to decide what tariffs to be collected, how to rule this country, and they used to play divide and rule. Yes, so remember this. Chartered company, example, East India Company, and next is Bank of England. Coming to next type, that is statutory company. Now this is created by specific act of parliament or state legislature. Yes, and this is owned by government, but this is not government company directly, I'm saying. Yes, separate definition you have. Under this, statutory company means you are starting this company defined under any special act of parliament, and this is owned by government company, independent legal personality, often serving public. Yes, so what are the examples? Like you have RBI, Life Insurance, Food Corporation, India. So these are few examples which is actually statutory company. Coming to third one, that is registered company. Now, in case of registered company, you will see this same definition when we started this unit. If you are registering, if you are incorporating under Companies Act 2013, that is your registered company. Yes, like Tata Company, Wipro, Infosys, Reliance, all other companies. Last type is your foreign company. Very interesting. Remember the definition. Let's take the example. Suppose this is your Amazon company. Okay. They got incorporation, means their birth date is outside India, but they are doing business in India also. If you see this feature, correct, so you will call that type of company as a foreign company. The registration is outside India, but they have the place of business in India. So incorporated outside India, but has a place of business, physical or electronic, conducts business activity in India. And HSBC Bank, yes, HSBC Bank you have, Amazon, operating office in India, correct? Google, Amazon, Apple company, all these are Tesla. These are going to be, one of examples of this foreign companies. So these are different types of companies based on incorporation. Now, coming to next type, that is on the basis of ownership. So let's start with the first one, that is private company. Private companies are very easy. See, one feature we already, I think two features already we discussed in case of this features of a company only. Okay, first about private company restriction, about transferability. Next, membership, 2 and 200. So these are two definitions or points which you need to remember. Remember, first limits membership up to maximum 200, yes, and minimum you require 2. Already you know this, yes. Now, next, prohibits inviting public to subscribe shares and debentures. This is the same thing we discussed in case of transferability of shares. Okay, and these companies are defined by the articles which restricts the transfer of shares. So this is about private company. Yes, coming to the next company, that is public company. Very easy definition. Let's see what they have defined as per their act. Company that is not a private company. Any company which is not a private company, you will call it as public company. Can you see this definition? Any company which is not a private company, that is public company. Correct? Now, coming to next one. It's like, if you are not resident of India, then you are foreigner. See, that is the same thing. But what is the definition of non-resident? Same. You are not Indian, you are foreigner. This is the same thing they are writing over here. You are not private company, then you are public company. Very easy definition. Correct. Now, coming to next, very important, that is government company definition. Remember, government company definition, this is company wherein more than 51% or equal to 51% of paid up share capital is held by central government or and state government, including the subsidiaries thereof. For example, let me give you a few examples over here. Let's say this is one ABC company. Okay. Now in this ABC Limited, central government holds, let's say 40% and 40% of paid up share capital. Remember this term. State government holds, let's say 15% of paid up share capital. So tell me, in this case, ABC company is known as, will be your government company? In this case, ABC will be a government company? Of course, yes, because this is 55% in total. You need to add this. And this is more than 51% or equal to 51% of paid up share capital. So this time, this ABC company is your government company. Let's take one more example. Let's say here you have XYZ company. Here, central government holds 26% and state government holds, let's say, 19%. Okay. Now, you need to tell me whether this company is your government company or your non-government company. Okay, this is now homework for you. Let's see whether you can tell the right answer or not. Then, last company, that is holding company. Okay, so we will be discussing holding company along with this subsidiary company. Okay, so let me tell you here only. Okay, so let's discuss about holding company. You must have, recently saw that Jio merged with Hotstar. Okay, now Jio holds all the control. Okay. And here Jio becomes holding and Hotstar will become subsidiary. Now, how to define control? A, if you are holding more than half of paid up share capital. Okay, if Jio holds more than half, means more than 51% or 51% of Hotstar. And B, here board of directors is also selected by Jio. Means if you are holding this control, you are going to become holding, or in some books you can see there are different name, that is parent. Okay, and Hotstar will become subsidiary. So this is the definition of holding and subsidiary. Yes, company that has control over one or more subsidiary companies. And what is the meaning of control? Means they are holding, let's say, more than 51% of paid up share capital, and board of directors are also controlled by them. So that is the definition of holding company. Now, last one, that is on the basis of liability. How we define companies. Here, first you have limited by shares. Yes, so basically you will see liability of each shareholder is limited up to the amount which you have promised or you have invested, and in that whatever is unpaid amount. Okay, liability of each shareholder is limited up to the amount unpaid of their shares, and as per the memorandum you need to follow each and everything. Remember, once fully paid, shareholders incurs no further obligation. As soon as you fully pay the amount, there is going to be no further obligation. So that is what company limited by shares. Then company limited by guarantee. Generally, you will see these type of companies in case of non-profit organizations like trust, NGOs. In that you will see this limited companies by guarantee. Then unlimited company with or without shares. Basically here your liability is not defined. Okay, suppose you invested only, let's say 10 lakh rupees, but now company become bankrupt and they have obligation of 50 lakhs. So you will be paying up to amount of settlement. You will not say I only promise for 10 lakhs. No, till your company will settle this 50 lakhs, whatever amount they require, they will ask from you. So that is what unlimited company. Yes, so these are the types of companies based on liability. Chalo, now coming to few questions. Now, which of the following is not a characteristic of a company? Artificial person, unlimited liability, perpetual succession, and separate legal status. Remember, already you discussed now features. In starting, in your second slide, we already discussed features. First one, artificial person, that is your feature of the company. Yes, so this is not your answer. Like you see Reliance company, they all are artificial in nature, but they are holding legal status. Yes, so this is one feature. Then perpetual succession means whether your owner is present or not, your company will continue go on, going concern. This is not your answer. Separate legal status, your company and your owner, they both are different. So correct answer is unlimited liability. As per features, we say that companies are having limited liability. Specifically, if they are going for unlimited liability, they need to write it. But commonly, or you can say generally, we say that companies are having limited liabilities. So right answer is your answer B. Then next, which of the following characteristics of a company refers to its ability to exist independent of its members or shareholders? Limited liability, artificial person, perpetual succession of membership. Basically, they're talking about which characteristic of your company is showing the ability to exist independent of its members or shareholders. That is limited? No. Artificial? No. Correct answer is perpetual succession. Yes, whether your owners are there or not, your company will continue. So right answer is answer C. Next, which characteristic of a company allows its owners to be transferred easily through the sale of shares? Transferability of shares, minimum paid up capital, incorporated association, common. C. In this, they are asking about which is the common characteristic in which you will say that you can transfer your shares very easily or you have some restrictions. That is common seal. Common seal talks about signature. Yes, incorporated association, that means you need to take registration under Companies Act or as per previous law. Minimum paid up capital, now there is no such requirement. So right answer is transferability of shares. Answer A. Already we discussed about what are the different things you will prepare in the final financial accounts. Correct. Balance sheet, P&L account, that is profit and loss account. Balance sheet, profit and loss, cash flow statement, statement of changes in equity, if applicable, and explanatory note or forming part of. Now remember, in your JIB, they are not explaining, they are not talking about statement of changes in equity. You will not learn about them. Yes, how to prepare it, how to calculate it. But in your JIB, you need to calculate balance sheet, means you need to make it, you need to learn about them. Then P&L account, profit and loss account, statement of cash flow, and explanatory notes. So these 4 things you need to learn in your JIB. Yes. Now, when we talk about their format, especially when you see companies are preparing financial statements, and if there is no prescribed format, then they will prepare as per their own requirement. Suppose if I want to withdraw, let's say I want to withdraw 50,000 rupees. Now, when I'm withdrawing that 50,000 rupees, what will happen? I will write my own application. Yes. And if you are withdrawing, you will write your own application. So if different people are writing that particular application, it will be different. There is no standard format. And every time that cashier or that person who is sitting over there, that person needs to read each and everything. Correct? But if you are following some standard procedure, like filling that form, that withdrawal form, that is very standard thing. Already that cashier knows, this is withdrawal form, this is deposit form. So things are very easy. Again and again, there is no requirement to read each and everything. Just they see the form, they see the amount and account number, and that's it. Yes or no? So these things are these things makes your working, your you can say deposit or any activity very easy. Yes or no? So this is the reason we are following some standard procedure. Similarly, companies are required to follow it. When they are following Companies Act 2013, they are required to follow some sort of standard procedures like forms. Forms should be in standard procedure. And who will provide these forms? Their actual working given under Schedule 3 of your Companies Act 2013. In this Schedule 3, they will talk about balance sheet format and profit and loss, that is P&L format. Yes. So under which schedule number you will get balance sheet and P&L format? Under your Companies Act 2013. Remember that schedule number, that is Schedule 3. Now coming to next point, that is when we talk about these companies, banking company, insurance company, company engaged in generation or supply of electricity, or any other class of company, we need to follow some special act. See, there are 2 things which you need to remember. If nothing is mentioned, yes, if your question is silent, if nothing is provided by act, okay, then you need to follow Companies Act 2013. If nothing is provided, just follow Companies Act 2013. But if they are specifically mentioning that this is your bank, this is your insurance company, this is your electricity supply company, then in that case, you need to compulsorily follow their own rules. Like for banks, you have your own act, yes or no? So bank will follow Banking Regulation Act before following Companies Act. Yes, if if act is silent, there is no specific act for your business, then please follow Companies Act 2013. But if your act is there, like for banks, for insurance company, IRDA, yes, for electricity supply company, we have some special act. So we need to follow that thing. Yes, so remember, which things are actually excluded from this financial statements? Banking, insurance company, and any company engaged in generation or supply of electricity or any other class. So right now there is no any other class. You need to remember only these 3 types of companies which are required to follow their own act before following Companies Act 2013. So this is about your financial statements, Schedule 3, when you compare with final accounts, how it is different, and for special cases like for banking, insurance, for electricity, we have some separate act. Now, coming to next topic, that is financial year. Now this financial year is very important. When we started this AFM in Unit 2, we already discussed one thing. That is accounting period concept. Yes, generally we follow this accounting period concept. Now, when we talk about accounting period concept, we say that every year we will start our books from April and we will close our books on 31st March. You started your financial year on April 1st, 25 and you will close on 31st March 26. Again, you will open for next financial year, that is going to be a 26-27, and again you will prepare your final or financial statements. Correct? This is the same thing you will see for each and every business. This is a very common thing and this is followed by each and every business. Now, so generally, period will end on 31st day of the March every year. Yes, this is for every business. But there are few cases which you need to remember now. Yes. Now, if your company incorporated means birthday. Under your company's account 1, already we discussed what is the meaning of incorporated. Incorporated means birthday. Registration date. Registration date of your company, birthday of your company. So, if you start your company on or after 1st day of January, yes, of a year, the period ending on 31st day of March of the following year means what? Let's take one example here. See, what they're saying here? They are saying if you are starting, before we discuss this rule, example, what is our general rule? General rule says that you will close every year on 31st March. Okay. Every year you need to close on 31st March. This is your general rule. Yes. Now, there is one point. They are saying this is a financial year. Okay. If you are starting your April and you have your closing on March. Let's say this is your April 25, this is your March 26. Now they are saying April, then you have May, then you have June, okay. Then you have here December 25 and then you have here finally January. Yes, 26. Now what they're saying, they are talking about that if you are registering, what you are doing, if you are registering on 1st January, yes, if you are registering, let me make one box only here. Okay. If you are registering between this time period, from January till March, if you are registering in this time period, if you register, though you will close every time on 31st March, if you register from 1st January 26 till 31st March 26. If you register between 1st till 31st March, correct? So you will be ending or you will be closing not on 31st March 26. You will be closing on 31st March 27. Guess this will be your closing. Let's say, for example, here, if you are registering, let's say here you are getting registration on 10th January 26. When you will close your book for the first time on 31st March 27. Yes, this is the first example. Next example, on let's say 20 February 26, if you are registering, again you will close on 31st March 27. Not in this financial year. You will close in your following financial year. है ना? So here you will see this. After this 12 months, you will close. Then, let's say on 28th March 26, if you got registration, you will close your first time book on 31st March 27. But what if we are registering before this December? So let's talk about that thing. Okay. This is your general rule. I hope you got this point. Yes. This is your general rule, and general rule says that you will close your books on 31st March every year. See, every year you will close on this. This is your general rule. Now, what if, let's say this is again your April, okay, and this is your March 26, this is your 25. Correct? This is your financial year 25-26. Now, here is your January. Yes, this is your January 26. Already we discussed about this time period. That if you are registering here, you will close in your March 27. Yes, you won't be closing on March 26. Now let's talk about this time period from April till January. Correct. If you're registering between these time periods, yes, let's say, for example, registration on, let's say, 7th July 25. Okay, if you got your registration of your company on 7th July 25, this is the registration, first time when you incorporated. You will close on this day, March 26 only. Okay. Before December, from April till December, if you are registering between these time period, you will close in this financial year only. That is 31st March 26. Let's take one more example. Let's say you got registration on 13th August 25. On which day you will close? Again, you will close on 31st March 26. Let's say one more thing. If you got registration on, let's say, 20th October, okay, 25, again you will close on 31st March 26. Yes, let's say one more. If you got registration on 28th December 25, again you will close on which day? You will close on 31st March 26. Every time you need to close when you're registering between these time period, that is April till December. Yes, if you're registering in that time period in any financial year, then you will be winding up, you will be, not winding up, you will be closing in this financial year end only. Yes, that is going to be your 31st March 26 of this financial year only. But if you are registering after January till March, then your closing will be next financial year. Yes, I hope you got this point. Let's solve few questions again and let's practice it, because this is very important. They can ask in, exam directly based on this scenario, because now they won't be asking any direct questions. They are asking based on conceptual questions. Okay. So let's solve few examples based on this. Let's say here is a registration side. Yes, and here is, let's say, about closing. Okay. I will tell you about registration. This is about incorporation, or you can say birthday. Okay. So let's start with the first one. On 15th July 26, you got registration. Tell me, which March you will see? March is a constant thing. Of course, every time you will wind up on March only. Yes, because in India we follow financial year rule. We are not following calendar year rule. We follow financial year rule, that you will be winding on, you will be closing your books on March. So this time, this 31st March will be which financial year date? 2027. See, you are saying this is a financial year. Okay. You are saying July 26. Correct? Means this is the financial year 26-27. Hello everyone, this is not 25-26. Hello, don't make that mistake. Means April 26 and here is a March 27. Isn't it? Now you are saying you are getting registration during this July. Yes? July means before the before January. Yes, of course. So this is here you will close on March 27 only, and this is going to be 2027 only. 31st March 2027 only. Yes, chali. Let's take one more example. Please try it. Coming to next example. Let's say if you are registering on let's say 19th October 24. You will be closing, of course, on 31st March. But which financial year you will take here? Okay. So let's again quickly see. Right now you are learning about this concept, Hana. So please don't try to go for shortcuts. Okay. First, for few practice for few examples, try to go with this time frame. So let's say this is again your April 24 and this is March 25. Hana. And if we talk about January 25, you are registering before January 25. Yes or no? This is your October. You are getting registration here. So you will close your books on March 25 only. So this is your March 25. Correct? Chal. Now, let's take one more example. And this example on, let's say, 22 January 27. Sorry. You got your incorporation registration on 22 January 27. Means, let's make one financial year. Okay, this is your financial year 26-27. Yes or no? If you are starting from April 26, you will wind up on March 27. Okay. April 26, March 27. Now, you got your registration on which date? You got your registration on January 27. Means, very important point that here you got registration after January 27. Yes? So, are you going to close your books on March 27, 2027? No. This time you will select 31st March of which financial year? 2027. Are you going to write 2027? If you are saying this is your financial year end, means you are wrong. You are totally wrong here. Yes. So which is the financial year we need to take here? Basically, here we will be taking your next financial year end. Following financial year end, that is March 28. Yes. So this is going to be 2028. Correct? This is how we need to calculate. Registration, incorporation, they are closing. Yes? Chali. So here we discussed about your financial year end. If you are registering before, you can say January, or if you are registering after or on January, 1st January, what will be your closing? Now coming to last point, that is that in case if you are incorporating or you are a company or body incorporated is a holding company, or if you are a subsidiary company of any company which incorporated outside India. Let's say you are a branch of HSBC Bank. HSBC Bank is your foreign company now. So in that case, you are required to follow some different financial year. In India, though, you are following financial year starting from April till March. But in case if you see outside countries company, they are following calendar year as their financial year. So they are starting from January till your December. Okay. So in that case, if you are trying to follow some different financial year, like your calendar year, for consolidation of its accounts outside India, then in that case, if you want to consolidate, like branch will merge with their holding company, with their parents. So in that case, when you're consolidating, when you're preparing one consolidated report, then at that time you need to take the permission from tribunal. Yes, from the tribunal. Okay, so this is about financial year. Yes, I hope everyone got this. Okay, chali. So here we complete our discussion based on financial year. This is about your general rule. If you are registering after uh, December, like 1st January or afterwards, how to close your financial year. Then before that, how to close it, already we discussed here. Okay, then we solve few examples based on it. Chali. So let's solve few questions now based on this topic. As per the Companies Act 2013, financial statements of a company include all of the following except what? Balance sheet, P&L account, changes in equity or director's report. Yes, in this question you need to tell about financial statement. So, which one is the odd one out which you will never include in a financial statement? That's what they're asking here. If we talk about financial statement, we prepare balance sheet, we prepare P&L, we prepare cash flow statement, we prepare SOKI, and last we prepare explanatory notes. Yes, so which one is your odd one out? That is your director's report. Yes, right answer is answer D. Coming to next question. Which of the following companies are exempt from the provisions of financial statements under this subsection? Yes, insurance, banking, companies engaged in the generation or supply of electricity, or all of the above. Generally, we follow Companies Act 2030, for all the companies. But if you are a banking company, you will follow Banking Regulation Act. If you're insurance company, you will follow Insurance IRDA, that one. If you're engaged in companies in electricity or supply of it, you will follow their own kind of special act. So basically, correct answer is all the above. Yes, so following companies are exempt from the provisions of financial statements under this subsection of companies. Correct? Chali. So right answer is answer D. Next, a company incorporated on 23rd February 24 will have its financial year end on which day? Okay, so now already we have discussed a lot. So this is your homework question, everyone. Let's see whether you can give right answer or not. Okay, so this is going to be your homework question. A, on 31st December, B, 31st March 24, C, March 25, or 15th February 25. Now it's your turn. This is your homework question. So here we complete your basic discussion of, company's account. Now, let me tell you about the format related to balance sheet. And this format is given under which schedule? Schedule 3. And in third schedule, we talk about formats for balance sheet and P&L. So let's start with the first one, format of balance sheet. Now this is your vertical balance sheet. Nowadays companies are following this vertical format, in which they will write about company name, their balance sheet as on date, because see, balance sheet you will prepare for any particular date. So you will write about financial year date, and under this schedule 1, part 1 talks about balance sheet. Part 2 talks about P&L account format. Yes, schedule 3 talks about the format. In part 1, they will talk about balance sheet format. In part 2, they will talk about P&L format. Now, As you can see here, first column talks about particulars, notes. This notes is actually related to explanatory note. And one of the forms of financial statement. Then, next is figure at the end of the current reporting period. Means, let's say you are preparing for financial year, or let's say here you are preparing for 31st March 26. So here you will write all the transaction details between 25-26, and next is going to be previous reporting period, that is going to be 24-25 financial year. And when you are writing two financial years, one is your current and next one is your previous, then this is the case of comparatives. Yes, this is known as comparatives. Correct? Chali. So let's start with the very first one, equity and liabilities. So shareholders fund, you will see the first one. Now in this you will see other classifications like share capital, reserve surplus, money received against share warrants. So let's see about this particular part. When we talk about share capital, now what are the things you will write under this? Because everything you cannot write in that balance sheet. First of all, you need to prepare balance sheet, and along with that you will prepare notes. In notes you will see further explanation. In balance sheet you will see the final answer. So what are the things you will include in share capital? Like number, amount of shares which you have authorized, yes, number of shares issued, subscribed, fully paid, subscribed but not fully paid, par value per share, reconciliation of the number of shares, outstanding at the beginning, at the end, their rights, their preference, restrictions if you have attached something. Yes, if you want to see the detail related to your share capital, refer to your notes. Yes, and remember, when you see the notes, you will get all the details about your any particular head. But ultimately, your final answer, final amount will be written over here. Yes, so under share capital, already we discussed. Now, let's talk about under reserves. What are the things you will include? Under reserves, whatever amount you have kept aside, like capital reserve, capital redemption reserve, securities premium reserve, debentures redemption, revaluation reserves, share options outstanding, other reserve, surplus. So basically, here you will include all your reserves and surplus that you have created. Correct? So this is about your reserves and surplus that you will show under this shareholders fund. Remember, they can ask what are the things you will include in under shareholders fund. So share capital, reserves and surplus, and lastly you will add money received against share warrants. Right now you are just giving one documents, and in that documents it is written that after some time you can purchase our equity at this much price at some predetermined amount. So right now they are not holding any company's equity, but after some time, after some period, they will be allowed to purchase your, you can say, equities. Yes, so these things are included under shareholders fund. Now coming to next, that is share application money pending allotment. When any companies are going for listing for the first time, at the time of application they will get all the amount. So when they are receiving that amount, they are not classified as shareholders money. Correct? Because when they are going for the listing, I guess when they said that we will be listing and we are going to sell our ownership, so whoever is interested, they will apply for it. By just applying, it doesn't mean that you got that equity, that ownership. No, that is not a part of shareholders fund. Here you will show it differently, like share application money pending allotment. Whatever amount you have received by issuing your shares for the first time, here you have not given any shares, you have not allotted the shares ownership to the shareholders. Here you have just taken their application of their interest certificate. Correct? So this is about your second point, and this is not a part of shareholders fund. Then non-current liabilities. Non-current liabilities means any obligation which you have for more than 12 months. Yes, that is what included under non-current liabilities. Any obligation, any amount which is for more than 12 months. Here you can see long-term borrowings, deferred tax liabilities, then long-term loan. Liabilities, any other if you cannot classify under long-term borrowing or deferred tax. And you will see about provisions. Yes, so these things will be the part of non-current liabilities. Then coming to the last one, that is about current liabilities. Current liabilities means any obligations which you have less than 12 months. When you have any obligation for less than 12 months, yes, like you have taken short-term borrowing, you have taken a small amount of loan, let's say for 1 month, 2 months, that will be classified under current liabilities. Sorry. Then, under current liabilities, you will see short-term borrowings, yes, that you have taken from the bank or from your friends, or after that you can see trade payables, other current liabilities you have, then short-term provisions. And if you add all this, shareholders fund, any amount which you have received yet to be allotted, or non-current liabilities or current liabilities, that will be form of your total. Yes, if you add all this will tell you about total equity and liabilities. That will tell you about total equity and liabilities. Yes, chali. Now, coming to next one, that is about assets. In balance sheet, you have two parts. One is about liabilities and equity, and next is about your assets. So, under assets, again, you have two classification, non-current assets, current assets. Non-current assets means their life or their usage or their benefit is going to be for more than 12 months. But current assets, their usage, their life is going to be less than 12 months. Yes, so let's talk about the very first one, that is non-current assets. Under this, first you can see you have fixed assets. Yes, under fixed assets like tangible, intangible. Tangible, which you can see their existence is there, their valuation you can easily classify. Yes, so this is about tangible assets. Tangible means they have their some physical life, like your land, building, vehicle. Yes, intangible means they are not having any physical existence. Like when we talk about goodwill, brand value, yes, copyrights, trademarks, any rights which you have taken. Yes, so these are giving you benefit, but there is no physical existence. They are just written on some paper, some legal papers. That is one. Then capital work in progress. Let's say you are constructing one building, so that is going to be your some capital asset, and that will benefit to you for more than 12 months. So that is going to be capital WIP. Then intangible assets under development. Let's say like you are manufacturing one drug, like which is going to help elder people and to recover any very big disease. So you are doing some research and development, and for that if you are incurring any expense, that is going to be classified under intangible assets. Yes. Now next is about non-current investments. Non-current investments means here again whatever you have purchased, like your gold, silver, jewelries, yes, land, building, any society which you have purchased, that is going to be your non-current investments. Then deferred tax assets. Deferred tax assets are part of your non-current assets, and then next you have long-term loans and advances, then other non-current assets. Correct. So these are about non-current assets. Then current assets, you have these classification like current investment, inventories, trade receivables, cash and cash equivalents, and short-term loans, advances, other current assets. So if you add all these things, this will give you total amount of your assets. Yes. So this is how we prepare your balance sheet. One side your equity and liabilities, next side you have your, you can say, about assets. Correct. So here we discussed about assets, liabilities, and everything. Now talk about financial statements. Yes, when we say that we want to prepare financial statements, yes, and as per schedule 3, when you're preparing, yes, you have two formats. First format is given for balance sheet, and next format, that is the second one, that is given for your P&L account. Okay. But when we say financial statements, you need to prepare three different, or you can say three more accounts in it. That is third one, your statement of changes in equity, known as SOKI. Apart from this, you need to prepare cash flow statement. Yes, we will call this statement as your CFS. And last is your explanatory notes. Yes. So basically, when we are discussing or when we are talking about financial statements, we need to prepare these 5 different statements. But the point is, in this, if you see fourth point, that is cash flow statement. So in your financial statements, you are covering only cash flow statements and not funds flow statement. Remember this. Though you can say when we are reading this unit 16, we have both the things, cash flow and funds flow. Means you can make this assumption that, oh, funds flow is also the part of your financial statement. Then answer is no. In your financial statements, you have only 5 different statements which you need to prepare, and in this you cover cash flow statement, that is CFS, and not funds flow statement. So remember this point. This is very important from exam point of view, that in financial statements, fund flow is also part of it. The answer is no. Yes, or the first part becomes your financial statement part, and that is cash flow. Means cash flow is more important compared to your funds flow. Yes, so let's discuss about this. So what is the meaning of, first of all, when we say cash flow statement, first we need to understand what is the meaning of cash flow. So whenever, if you see cash coming, cash going out, that is flow. Cash is coming, that is inward flow. Cash is paid, that is outward flow. So basically, when your cash is coming, cash is going out, that is going to be your cash flow. Flow includes both the things. Both the things means your inward and your outward flow. Yes, your inward and as well as your outward flow. Or you can say inflow or outflow. Cash flow, flow includes both the things. It can be your inflow or outflow. So what is the meaning of cash flow? Cash flow means movement of money. Yes, movement of money that is into and out of your company over a certain period of time. Yes, and if the company's inflows of cash exceeds its outflows, means you have good balance or positive balance of cash. For example, you are getting a salary. Yes, when salary is actually credited in your account, so that will increase your cash flow. Yes, that will increase your cash flow. Yes, or if you are selling goods, for example, if I am supplying this pen to you, in this case, you will pay cash to me. Yes, so this cash in my terms is going to be inflow. But if we talk about your point of view, that is going to be outflow. Yes, that will be outflow because you are supplying the cash. So basically in your cash flow, you need to check whether your cash is coming to you or you are paying cash. Yes, as per that you will make the entries. As per that you will add or you will subtract. Yes. So now tell me, after understanding this meaning of cash flow, what do you think? As soon as you are receiving cash, you are going to add. Yes, suppose you received salary. So you will add in your account. Let's say 15,000 you have received salary. Now, suppose you purchase vegetables. For this you have paid, let's say 2,000. So in this case, your cash is coming in? No. In this case, your cash is going outflow. Yes, so remember this point. Whenever we are talking about expenses, your cash is going out. Your cash is going out. Yes, and whenever you are receiving cash, you are gaining it. Means that is inflow of cash. So there are 2 things which you need to remember in this whole unit. That is about when you will say cash inflow and when you will say cash outflow. Because based on this only you will say whether you are going to add this or you are going to subtract it. Yes, so this is the very basic understanding of your cash flow. And the second understanding we have learned, that is our financial statements. Now, one more thing before we proceed with this unit, let me tell you about that. when we started accounting, yes, when we started your accounts especially, in your second unit, we discussed one thing, that is basis of accounting. Basis of accounting. And under this, you have two bases. First, that is your cash basis. And next, that is your accrual basis. So basically, when we are talking about accounting, yes, in your accounting, you can pass journal entries, ledgers based on these two bases of accounting. Yes, now what is this, cash and accrual? When we say cash, means you are going to record only and only when you are having cash inflow or cash outflow. Otherwise, you will not record it. Yes, so basically under cash basis, only cash transactions you are going to record. Yes, on the other hand, if you talk about accrual basis, you are going to record both the types of transactions. Yes, cash as well as your credit transactions. I hope you remember this point. If you are not aware about these two things, means you need to work hard in your accounts, because this is very conceptual thing, very basic thing which you need to learn when you start studying your accounts. Yes, and already we covered this part in your unit 2 in your first module. So in that part also you have learned about cash basis. Yes, and in case of financial statement also you will see this cash flow statement, and today we are going to talk about this cash flow only. So already before reading this particular unit, I have already seen this topic. Yes, first in your unit 2, or I think unit 3, no, I think unit 2 only, and then in your financial statements part. Yes, chali. So now let's talk about next thing which is very important from your exam point of view, that is different types of activity which you need to remember. So cash flows is actually divided based on 3 different activities. Number 1, you will see that is operating activities. Number 2, you will see that is investing activities. And third, you will see that is financing activities. Yes, so these are your 3 activities which you need to remember: operating, investing, and financing. So when we talk about operating, you can see here one term is given. Yes, that is operation. This is not that medical operation. This is your business day-to-day operation. Yes, your main business activity. Yes, for example, if we talk about bank. In your bank, what is the main activities? Taking deposits from the customers, sanctioning loan to them, yes, providing credit facilities, providing FD facilities. Yes, so these are your operating activities. Based on this, or you can say your main agenda of doing your banking business is this only. So whatever your main agenda is, whatever your day-to-day activities are, that is going to be, incorporated under operating activities. For example, if I'm starting my stationery business, so in that stationery business, what I'm going to do on daily basis, of course, I will purchase stationery items, and on the daily basis, I will supply this stationery items. Yes, correct? So this is going to be my operating activities. Let's take one more example. For let's say this time we are starting furniture business. So now tell me, in this furniture business, what I'm going to purchase or what I'm going to sell on daily basis? Mobile phone? No. Of course, furnitures. So every day which I'm purchasing from wholesalers, or if I'm manufacturing it and then I'm supplying to the customers, whatever I'm doing on my daily business is, that is going to be my operating activities. Okay, so first let's talk about this first activity which is known as operating activities. Now, let's read this point. So operating activities, these are the principal revenue producing activities of the entity. Yes, whether you are doing business, like if you are supplying goods, if you are manufacturing, or even if you are providing services, that will fall under this operating activities. Now, operating activities, this consists of inflows and outflows of cash, which will be resulting from, or which will result into net profit or loss. Now, for example, when I'm saying that I will start one furniture business, so in that furniture purchasing is going to be my operating activity. Yes. Second thing that you need to identify whether cash will come, means cash is going to be inflow or outflow when I'm purchasing furnitures. So remember, whenever I'm going to purchase furnitures, on the other hand, I will pay cash. So cash is going out from my business. Cash is going out from my business. Yes. Let's take one more example. This time, let's say I'm starting electronic business. Yes. So I purchase, let's say, 1,000 laptops. So when I'm purchasing this 1,000 laptops, in return, I will pay cash. Why supplier will give me laptops on free basis? Of course, he will not. He will ask for the money. So this laptop, when I'm purchasing, I need to pay cash. Yes, I need to make the payment. Otherwise, why he will supply goods? Yes. So if I'm doing now electronic business, I'm purchasing laptop, and in return when I'm giving cash. So this cash is going to be what? From my business point of view, I am paying cash, or here I'm receiving cash? Of course, I'm paying cash. Yes. So this is your inflow or outflow? This is your, of course, outflow. Yes. Let's take one more example. Now you want laptop from my, electronic shop. So you purchase this laptop. Yes, from my business, you purchase this laptop. If I'm giving this laptop from my one hand, in return, I will take cash. Yes or no? Of course, yes. So this cash is going to be what? Inflow or outflow? Of course, inflow. Yes, means cash will increase in my business. Okay, so first thing, I'm sorry everyone. So first thing, you need to identify which activity is this. So first we identified this is your operating activity. Then next thing you need to identify whether you will receive cash, means cash inflow, or cash outflow. So whenever you are purchasing goods, you need to make the payment. Both the things cannot be in your favor. If you are purchasing it, of course you need to pay. That will never happen. You are purchasing goods and cash you are also receiving. Why someone will do that? Yes, so remember this point. So this is all about your operating activities. So under in your cash flows, you have three main activities. First one, that is your operating activities, and already we discussed about this. So what are the examples now? Cash receipts from the sale of goods and the rendering of services. Yes, so this cash receipts means what? Inflow. Cash receipts from royalties, fees, commission, and other revenues. This is also your inflow. Okay, chali. So this is about your operating activities. Let's talk about one more example of operating. Let's say this is your Godrej company. Now, Godrej company manufactures these many products. Godrej company manufactures these many products. And on daily basis, they are, purchasing, supplying these products on daily basis. This is their main business. So if they are purchasing raw materials, or they are purchasing this goods and then they are supplying it, then this is going to be what? Operating? Yes, this is going to be operating business. Yes, and if they are purchasing it, manufacturing it, so that is going to be outflow of cash. But as soon as they are supplying to you as you are customer, or you can say you are consumer, this will lead to inflow of cash. Yes, now I hope this point is very clear to each and everyone. Already we discussed with so many examples. Correct. And after this also, if you have any further doubts, any further queries, you can ask me through comments, or you can join my Telegram group as well. Okay. Now, coming to your next activity, that is going to be your investing activities. Yes, investments. Achha, tell me, what are your investments? Salary which you earn, that is your investment? Or when you purchase land, building, gold, silver, shares, FD when you are opening, that is your investment. Yes, what do you think? Salary which you are earning on monthly basis, that is your investment? Or when you are purchasing gold, silver, land, building, furniture, or let's say shares, mutual funds, that is your investment. What do you think? Of course, when you are investing, when you are purchasing gold, silver and etc. things, that is your investment. Correct? Means whatever asset you are purchasing, which you are going to hold for longer period of time. Yes, and that particular asset will benefit you. Because in case of emergency, you will use that, or because you want to create your wealth, that is why you are holding these things. This is what investing means. Similarly, businesses are also doing. Let's take one example of bank. So in bank, on daily basis, customers are coming, they are taking loan. That is operating activity. But banks are also, acquiring other subsidiaries. Yes or no? They are purchasing other bank. Correct? So that is investing activity. Banks are purchasing land. Banks are purchasing furniture. So main agenda of bank is to purchase furniture and sell that. No. They are purchasing building. They are creating their society. That is their asset. And that is investment. That is what? Investment. Yes, if they are holding gold, silver, yes, all the things which they are going to hold for longer period of time. If they purchase it, if they sell it, that is going to be your investing activity. Please don't get confused. This is very easy. Just keep this example very simple. Again, I am repeating, whatever you are doing on daily basis, that is your operating activity. Yes, on the other hand, when you are purchasing gold, silver, land, building, assets, car, etc., that is going to be your investing activity. When you are purchasing it, even when you are selling those items, that will fall under investing activity. Yes, let's read now what is the meaning of investing activity. Always remember, whenever you are reading any topic, identify simple examples. If you're comfortable with simple examples, then you can, go for difficult examples. If directly I will just start reading these examples, you will get confusion. Yes, but for retaining this concept for longer period time, we need to start with very simple, very basic examples, which is actually around us. That is the reason I'm giving first a very simple example, which you can link, and try to imagine that situation. When you're purchasing asset, when you're purchasing gold, are you going to purchase on daily basis? Are you going to sell it on daily basis? That is your main business? No. Think like this. Then only you can remember this. If you are trying to mug up these topics, investing means this, investing means this, you will not retain it. After completion of these three activities, again you will feel confusion. And what is the meaning of investing? Financing na, investing na, you will do this. So please, think or just imagine that situation. Okay, chaliye. So let's read about this investing activities. So investing activities, this include acquisition and disposal of long-term assets and other investments not included in cash equivalents. Yes, so basically when we are acquiring long-term assets, other investments, that is going to be your investing activities. But remember, we are not going to include cash equivalents. Yes, cash equivalents means any investment which you have done for less than 90 days, which are readily available to convert it into cash, like treasury bonds. Yes, their max life is 90 days. So that is your cash equivalent, your bank balance, cash equivalent. Yes, next, cash outflows represent that you are purchasing. So basically, if I say your cash is going out in case of investing activity, if cash is going out, if one hand is going out, means another hand will come in. always think this as your, item if you're purchasing or selling. So if they are saying, they're not talking what we are doing, what activity we are doing. They are just saying your cash is going out. Just based on this cash is going out, what assumption you will make? If one hand is going out, another hand needs to come in. Means if cash is going out, so assets we are purchasing. Yes, simple. So that is what when cash outflows represent extent to which expenditures have been made for resources intended to generate future income and cash flows. On the other hand, if we talk about cash is coming in, yes, cash is coming in. So one hand needs to go out. If cash is coming in, something needs to go out. We are talking about investment activities. So when you will receive cash, of course, when you will sell this asset. If you are selling the asset, cash will come in because buyer will make the payment. Otherwise, why you will supply that asset? Correct. So that is going to be your inflow. From investing activities, there is a net decrease in such assets. So if you have supplied your assets, of course, assets will be decreased. On the other hand, cash in your hand will increase. Now, what are the examples? Cash payments to acquire property, plant, equipment, intangibles. So tell me, cash payments means outflow. Yes, these payments include relating to capitalized development cost, self-constructed property, plant, equipment. If you are doing construction also, that is going to be part of investing activities. Yes, chaliye. So here we complete your second type of activities, that is investing. So operating, investing, done. Now coming to your last one, that is of financing activity. Now always remember, financing means about funds. Financing means about funds. Okay, remember, F means financing means funds. How we can generate funds? Yes, though you are earning salary, but what if you want, let's say 10 lakh rupees? So how you will generate this funds? You will go for bank loan, you will borrow from your friends, you will borrow from your relatives. Yes, so that is what we are going to talk under financing activities. Suppose you want, let's say vehicle loan. So that vehicle loan that you are taking, that is going to be your financing activity. Okay, chaliye, let's read about this. Acha, before that, let's talk about your investing activities. Like here, when you're purchasing table, this shelves, chair, machine, yes, this whole factory, that is going to be your investing activity. Next, financing activities. These financing activities useful in utilizing the cash generated through operating investing activities. Now, these are utilizing for increasing cash inflows in times of need. So financing means cash proceeds from issuing shares or other equity instruments. When you are issuing equity, means you are giving ownership. Yes. So what here you can take, see, if I am giving my company's ownership, I am saying now you also become my company's owner. So in return, you need to pay something for that ownership. Yes, so that is what I am sharing equity, you need to pay for it. Okay, that is what one example. Cash payments to owners to acquire or redeem the entity's shares. Yes, so here when you are making cash payments to the owners so that you can buy back those shares, that is going to be financing activities. Very simple, very interesting one. Again, I am saying financing means we are going to generate funds. How we can generate funds? Either you can issue your company shares, company ownership, or you can borrow it. So both the things are coming under financing activities. On the other hand, when we are repaying it, that is also part of your financing activity only. Yes, chaliye. So for example, when you are talking about stocks, bonds, debentures, loans, yes, that is going to be your financing activity. Chaliye, let's solve few questions now based on this. First question on your screen, for the purpose of preparing cash flow statement, which one of the following is considered as operating activity? Please everyone try this. Think which is going to be right answer in case of operating. You have 4 options on a screen. Yes. A. Acquisition of machinery. B. Purchase of goods for sale. C. Issue of debentures. D. Repayment of term loan. Okay. So when we are talking about operating activities, that is acquisition of machinery, machinery is going to be your long-term asset. So this is not your answer. Issue of debentures, when you are issuing debentures, ultimately you are borrowing from the public. This is not your answer. Repayment of term loan, whatever loan you have acquired in case of financing, that is repayment. So correct answer is purchase of goods for sale. So right answer here is answer B. Next one. For the purpose of preparing cash flow statement, which one of the following is considered as investment activity? A. Buyback of shares. B. Redemption of debentures. C. Manufacturing of goods. D. Disposal of machinery. When we talk about manufacturing of goods, Hana, if you are seeing this term goods, means we are talking about our main business activity. Okay, we are talking about this main business activity. And if we are talking about buyback of shares, means we are purchasing our own shares from the ownership. So this is about financing activity. Redemption of debentures, again, this is your financing activity. Yes, and manufacturing of goods, this is your operating activity. But when you're purchasing machinery, that is also your investment. And when you are selling it, that is also your investing activity. So right answer is answer D. Next, please everyone try this now. Now, the cash flow statement primarily provides information about profitability of the company, financial position of the company, cash inflows and outflows of the company, revenue and expenses of the company. So, cash flow provides what? Profitability of the company? No, cash flow is never providing profit of the company. Financial position, this is given by balance sheet. Yes, profitability is given by P&L account. Revenue and expenses, again, this is given by your P&L side account. Yes, but on the other hand, cash flows and outflows are given by cash flow statement. Your cash inflow and outflow is covered by this. Next, Which of the following is included in the operating activities of a cash flow statement? Purchase of equipment, cash received from customers, issuance of shares, payment of dividend. Yes. So basically, when we are talking about equipment purchasing, that is again your that is your investing activity. Because machine is that item which you will use for long period of time. So this is not your answer. Then issuance of shares, this is your financing activity. When you are issuing shares, you are getting money in return. Payment of dividend, that is also not your answer. Right answer is cash received from customers. Right answer is your answer B. Next. Which of the following cash flows is typically classified under financing activities? Interest received, payment of dividends, purchase of inventory, sale of equipment. Which of the following cash flows is typically classified under financing activity? Financing means interest received, payment of dividends, purchase of inventory, sale of equipment. When you are purchasing equipment, that is your investing. So sale is also investing. When you are purchasing inventory, that is your main business goods that you are purchasing. Payment of dividends or interest received. Tell me. Remember, interest received. When you will receive the interest, let's say if I opened one FD. Okay. So from that FD, whatever interest I am generating, that is going to be my interest received. So this FD is what? This FD is my investing activity, but whatever interest I am generating, that is my operating classification. Okay. On the other hand, right answer is payment of dividends. Answer is B. What is the actual meaning of banks? Yes. What is the meaning of banking company? So banking company is generally governed by the provisions of the Companies Act. Of course, if your Banking Regulation Act is silent, then you will follow this Companies Act 2013. But if some points are given specifically related to banks, and it is already mentioned in your this act, which is known as Banking Regulation Act, then you need to follow this particular act. Yes, so there are two things which you need to remember. First of all, you need to follow your own specific act, which is known as Banking Regulation Act. If this act is silent, then you can follow Companies Act 2013. Yes, so these are the 2 points which you need to remember. Now, when we talk about banks, what are the different banking businesses in India? So there are various types of banking businesses. Like first one is your nationalized banks. Yes. Next is your State Bank of India. Then you have foreign banks, which are having branches in India. Then you have cooperative banks, then RRBs, then private sector banks, then you have small finance banks, and then payment banks. So there are different types of banks which are actually established in India. And how they established their business, or how they started this banking business, by following Banking Regulation Act. And if this Banking Regulation Act is silent, then they are going to follow Companies Act 2013. And basically what is going on in bank? Which institute or which particular type of business we classify as bank? When they are accepting deposits from the public, and when they are giving or sanctioning loans to the public. You are giving a loan, financial help to the public, or when you are depositing their amount. That is a very basic nature of bank. If you fulfill this, then you need to follow this act. So what is the definition and what are the functions of bank? So let's read this. So this is given as per section 5 of which act? Of Banking Regulation Act. So first they are defining what is the meaning of bank. So bank accepts the deposits of money from the public for the purpose of lending or investment, and deposits are repayable on demand or otherwise by check, draft, order, or any other way. So if you fulfill this definition, you will be classified as bank here. Yes, so as per section 5, if you are accepting the deposits of money from the public and for the purpose of lending or for the investment, then you are classified as bank. Okay, now there are different rules, different sections given under this. First is section 29. So as per your Banking Regulation Act, they are saying whenever you are preparing financial statements, like when you are preparing balance sheet, P&L account, you need to follow which format? You need to follow here Schedule 3 format. Yes, when we are talking about banks, they need to fulfill Schedule 3 format, and under this, Form A is given for balance sheet, Form B is given for P&L account, and who issued this format? RBI. Yes, these are very important points which you need to remember. And like other companies, they wind up their business on 31st March. Your bank is also closing on 31st March every year. Next month you have your closing. As per which act? As per which section? As per section 29 of Banking Regulation Act. Why you are closing every year on 31st March? Why not on 31st December? Because we follow here section 29 of your Banking Regulation Act, and it is clearly mentioned that you need to close your bank's books on 31st March every year. That is the reason we are not following calendar year. Okay, now coming to next about signature. See, if I just give one paper without any signature, without any stamp, that is going to be any authorized paper? No. If you want any authorized paper, you need to take signature. Yes, stamp. Then only you will say that this is authorized paper, this is genuine paper. Just by, writing all the details, that is not your, legal document. If there is no stamp, there is no signature, no one will accept that document. Similarly, when in banks, when you're preparing balance sheet, financial accounts, basically, at last you will see bank signature. Yes, respective authority will sign, along with that auditors will sign. That will make those financial statements genuine. Yes, so what are the signature requirement of financial statements? Let's read about it. So banking companies incorporated in India means happy birthday. Already we discussed what is the meaning of incorporation. Means your birthplace. If your birthplace, your birth date we are celebrating in India, then you need to sign by manager or principal officer of the banking company, and at least 3 directors needs to sign on that financial statement. Means what? If you are banking company and you got your registration in India, yes, then first of all you need to sign, you need to take a sign from manager or principal officer, yes, of the bank, plus this is or, yes, this is oblique one, but next is your plus one, that is compulsory thing, bank or principal officer, and plus at least 3 directors needs to sign on that paper. But what if we are having less than 3 directors? Then if you are having less than 3 directors, then all the directors are going to sign on that financial statement. Sorry. Okay, so this is about signature on financial statements. Now, but India, when we see in India, we have, HSBC Bank, foreign banks also. Then, so if you are a foreign banking company, yes, then manager or agent of the principal office in India. Now, who will sign? Sorry, everyone. Manager or agent, yes? Manager or agent. Yes, who will sign? Manager or agent of the PO, principal office in India. So this is about signature on financial statements. First, you will prepare financial statements. First, you will prepare that report. After that, only you will make the signature. No? Yes. So who will sign? That is divided into 2 conditions. If your bank is incorporated in India, then you need to fulfill this, manager or PO plus 3 directors. If you have less than 3 directors, all the directors are required to sign on that. Next, you have foreign banking company. Foreign banking company means here manager or agent. Yes, of the principal office, they are required to sign on that paper. Then, as per section 29, they are also applicable to nationalized banks, State Bank of India, RRBs, private sector banks, small finance banks, and any payment banks. So basically, this section 29 is applicable on all the types of banks which are working in India. Yes, chali. So now coming to your next part of this, that is going to be audit. In your bank also, when you complete your financial year, yes, you will call auditors. Start audit will go on. So in that case, which section you need to follow? Section 30. Again, this section is given as per your Companies Act? No, this is given as Banking Regulation Act. Okay, so as per this section, accounts must be audited by a person duly qualified under any law for the time being in force to be an auditor of companies. Now, every banking companies before appointing, when you, suppose you are banking company, okay. Now, when you are appointing first auditor, or again if you are appointing, or if you are saying from now onwards you won't be auditing in our bank, yes, that is removing, then you are required to obtain the prior approval. Yes, so there are three conditions, everyone. Appointing, reappointing, or removing. Then you need to take prior permission. Yes, first of all, you need to take the permission from whom? From your Apex Bank, from RBI. RBI, we are trying to appoint this XYZ auditor. We want to reappoint this XYZ auditor, or we want to remove this auditor. You need to discuss, you need to take prior permission from whom? From RBI. So this is given under section 30. Yes, under section 29 we discussed about signature, about financial statements. After that you will conduct audit. Yes, so how you can conduct it, that is what we have discussed here. Now, coming to next, that is section 31. First, you prepared financial statements, then you have taken signature. After that, auditor will come. Now, next one. Now, you will submit documents to the respective authorities. Yes. So, as per section 31, you will submit documents to RBI. Yes. You are going to submit documents to the RBI. Now, when you are submitting documents to the RBI, take 3 copies of your financial statements, that is balance sheet and P&L, profit and loss account. And you need to submit to RBI. Yes, and within how many days? Within 3 months from the end of the period. Yes, so suppose you are ending your period on 31st March 26. From this date, you have 3 months. April, May, June. Okay. So, till 30 June you have this time to submit. How many copies? 3 copies. Of what? Of balance sheet plus P&L. To whom you need to submit this? You need to submit to RBI. But what if you are unable to prepare this balance sheet, you are unable to complete your audit? Then there is one exemption. There is one point which you need to remember. That submission can be extended up to, further period of 3 months by RBI. As a bank, can you extend your this time period by your own? No. You need to take permission from Apex Bank. RBI, we are unable to complete our audit. Please give us some more time. Yes, and further extension they can get for how many days or for how many months? That is for 3 months. Okay, but generally all the banks are required to submit their documents by 30 June. Yes, by the end of period, and that time period is 3 months. Within 3 months, you need to submit to the RBI. Okay, so this is about section 31. Now, coming to your next section, that is going to be 32. Submit documents to registrar of companies. Now, what you are going to see, you are going to submit documents to your ROC. This is also known as ROC. Yes, Ministry of Corporate Affairs, Government of India. So, it requires a banking company, but not other types of banks. Again, they need to furnish 3 copies of its annual accounts and auditor's report to the ROC. What you need to submit? You need to submit annual accounts plus auditor's report. Okay. To whom you need to submit? You need to submit to ROC. Okay, but this is applicable only for banking companies, not for other types of banks. Now, there is one rule, and this rule is important. As per this rule, banking regulations, here accounts and auditors' report shall be published in a newspaper circulating in a place where a banking company has its principal office. Let's say here is one XYZ bank. Yes, and they have their principal office in, let's say, Mumbai. Yes, so what now this bank needs to do? Bank needs to publish in Mumbai region, yes, this annual report plus auditor's report of their bank in Mumbai only. Okay? In how many days? From 31st March, you have 6 months. As soon as you are going to end your financial year on 31st March, after that you have 6 months and you need to publish in that newspaper, which is actually circulating in that place. So this is a rule 15 which you need to follow given under banking regulation. Yes, and this is your rule 9 given by rule 1949. Okay, so this is about section 32. Submit documents to registrar of companies. Now, next we are going to talk about, schedule given by your Banking Regulation Act. So this is given under third schedule under Form A, which talks about balance sheet form. So it starts with your first capital and liabilities. You will start with this. All your capital and liabilities will be given under this. Then you have assets. Yes, next side. And here, important part is, you need to remember this schedule number. This is very, very important. Yes, you need to remember this. Like for capital, you have schedule number 1. For reserves and surplus, you have schedule number 2. For minorities interest, you have 2A. For deposits, you have 3. For borrowing, you have 4. Then for other liabilities and provisions, you have 5. Yes, so basically if you take the first initials, you can remember this. Yes, so first initials is given as CRM, DBO. Yes, C means capital, R means reserves and surplus, M means minorities. D means deposits, B means borrowing, O means other liabilities and provision. So how we classify? 1, 2, 3? No, this is your 2A. Then 3, 4, 5. Yes, so under your capital and liabilities, you have schedule number from 1 to 5. Yes, and under C, capital means 1, reserves and surplus means 2, minorities interest means 2A, D means your deposits, that is 3, B means your borrowing, 4, and other liabilities and provisions given under 5. So you need to remember the schedule number because in exam they are asking this schedule number directly. Yes, so CRM DBO 1, 2, 2A, 3, 4, 5. Okay, now Coming to your asset side, cash and balance with RBI, balance with banks and money. Then you have, this is continuation of this part. Balances with banks and money at calls and short notices. Then investments, advances, fixed assets, other assets, goodwill on consolidation, debit balance of P&L account, and then you have contingent liability. Again, just see their initials like CBI, yes, advances, AFO, correct? Then you have here contingent liability. So under assets, you have CBI, AFO, and then you have contingent liability. So till 5, you have covered under capital and liability side. 6, 7, 8, 9, 10, 11, and then you have 12. Yes, this is how you need to remember this part. Okay. This is how you need to remember schedule number with their respective names. Yes, so under your capital and liabilities, you have CRM, then you have DBO covered from schedule number 1 till 5, and in your assets, you have from CBI, AFO, contingent liability. It starts with 6, 7, 8, 9, 10, 11, and then you have 12. So this is how you need to remember this particular, form number, schedule number with their names. And this is very important. Now, one by one, let's talk about each of the schedules. Like first schedule talks about your capital. Under capital, for nationalized banks, like whatever the capital you have generated, yes, you will write it. If you are a bank incorporated outside India, like HSBC Bank, then how much amount you have brought in by the banks by your way of startup capital. And here you need to take permission of RBI. Yes, so this is the amount HSBC actually brought in India to start their branch in India. Then amount deposits to be kept with the RBI. How much amount you need to deposit with the RBI, that is what you need to fulfill here. Now, if you have borrowed any other amount from the banks like authorized capital, issued capital, yes, already we have discussed this part in your company's accounts 1. Yes, this part is already covered in the company account 1. I hope you have watched that part. Chaliye. So this is about your first schedule capital. Then next schedule is your reserves and surplus. All the reserves, whether you have stats reserve, yes, you have capital reserve, you have share premium, yes, foreign currency translation reserve, investment reserve, you need to cover under this. That is known as reserves and surplus. Then coming to your third schedule, that is going to be deposits. Whether it is demand deposits from the banks, from others, saving deposits from the bank, or any term deposits which you have taken from the bank or from any other sources. Yes, so this is your schedule 3. Then borrowing. Yes, borrowing which you have done from India only, or if you have done outside India. Now in India, you have 3 options. You can take loan from RBI, you can take loan from other banks, or you can take loans from other institutions and agencies. And remember, borrowing outside India also you need to classify separately. Then next schedule is other liabilities and provisions. Yes, if you have any other liabilities like bills payable, inter-office adjustments, any interest accrued, deferred tax liability, others you need to classify under this. And till your schedule 5 we cover under capital and liabilities. From your next schedule, that is schedule 6. Cash and balances with RBI, that is your cash in hand, balances with RBI, in current account, in their other accounts, you need to write over here. Then next is schedule 7. Here, all the balances with banks and money at call, short notice, whether in India or outside India, you need to classify it. Whatever investments a bank has done, you need to report it here. Yes, whether government securities, in government securities they have invested in shares, in debentures, or they acquired any other banks, subsidiaries, you need to mention it under investments. So that is your schedule 8. Now whether you have invested in India or outside India, again you need to report under this schedule number. Then next is your schedule 8 that talks about again that investments. Okay, so already we have covered here, just you can read it further. Then 9th is about your advances. Schedule 9 talks about advances. Bills purchased, discounted, any cash credits, yes. Any amount of secured loan, any amount which is covered by banks and government guarantees, unsecured, you need to classify in separate head. This is your schedule 9, which is known as advances. Then you have fixed assets, all the tangible, intangible, land, building, plant, machinery, that will be classified under schedule 10. Then you have other assets. If apart from your fixed assets, apart from your investments, if you have any other thing which you want to report, then you will choose this schedule 11. Inter-office adjustments, interest accrued, stationery stamps, yes, deferred tax asset, that is what. Then last is going to be schedule 12, contingent liability. So under contingent liability, what you need to include? Claims against the banks not acknowledged as debt. Yes, suppose someone filed court case against your bank, but till now there is no final verdict is there. So that is the reason you will classify it under contingent liability. Liability for partly paid investments or any liability on account of outstanding forward exchange contracts, you need to classify under this. If you have any guarantees given on behalf of constituents like in India, outside India, you need to classify it under schedule 12, known as contingent liability. And here we complete your unit. Chali, now let's solve few questions based on this. First question on your screen. Banking companies in India are primarily governed by which of the following acts? Companies Act 1947, Companies Act 2013, Banking Regulation Act 1949, D both, B and C. So basically when we are talking about banking companies, we need to follow both the rules. Yes, first of all, you will be following Banking Regulation Act. If it is silent, you will follow Companies Act in place of that. Under the Banking Regulation Act, how many copies of balance sheet, P&L, must banks submit to the RBI? 1, 3, 5, 10. Yes, that is going to be 3. Very good. Chaliye. Next. As per section 5 of the Banking Regulation Act, a bank accepts deposits of money for which primary purpose? Lending or investment, buying assets, distributing profits, payment of taxes. This is given under the definition. Yes, so right answer is answer A. Next. Under section 29 of the Banking Regulation Act, what is the specified format for the balance sheet and profit and loss account that banking companies must follow? Form A, that is your P&L. Form B, balance sheet. Form A, balance sheet. Form B, P&L. Form C, balance sheet. D, P&L. A, statement of cash flows. B, profit and loss account. We never discussed about cash flow under this unit, and we never discussed any form which starts with D. Yes, so you have two options now, A or B. So right answer is going to be B. Form A talks about balance sheet form and Form B talks about P&L. Yes, so right answer is answer B. Okay, next. According to section 29 of the Banking Regulation Act, who is required to sign the balance sheet, P&L account of banking company incorporated in India? The manager or principal officer and at least 2 directors. B, manager or principal officer and at least 3 directors. Only the manager or principal officer. D, the chairman and 1 director. So right answer is answer B. Yes. If you have less than 3 directors, then all the directors are required to sign it. So right answer is answer B. What is the meaning of computerized accounting? Basically, whatever you are dealing in bank, like numbers, yes, their entries, that is your accounting part. Yes, accounting means what? Any transaction which gives you monetary benefits or monetary value, you are recording in the books. That is what accounting. You are preparing proper records, their journal, ledger. Yes, you are making their final books so that you can calculate profit, loss. That is the whole thing, accounting. But earlier you used to do manually, as we discussed just now. Now we are using computers for it. Yes, like we have Oracle, Tally. Yes, so we are using this softwares to do our entries. Correct. Now just by writing the transaction, you can generate so many reports. Suppose if you want to create P&L account, you can do it within a fraction of a second. You just need to put the data and the software will give you final output. If you want balance sheet, you can get in fraction of a second. If you want cash flow statement, if you want any stock report, if you want any credit report, loan report, just a fraction of a second. Yes, so this is just because of computerized accounting. So let's read the definition that an accounting system is one that performs following functions. Yes, you need to remember that if you're saying you have accounting system, then what are their functions? Let's start with the very first one. That is, it captures business transactions in the form of accounting entries. Yes, like earlier when you used to see the transactions in monetary value, you used to record journal. Yes, in your computer also, you will be recording as soon as you are identifying any transactions in monetary value. You will be entering their entries. Now, after that, accounting entries are used to prepare financial statements. See, definition of financial statement will never change. Earlier also, we used to say financial statements includes, oh, just a second. In your company's accounts too, we discussed about this financial statements. Yes, under financial statements, you will prepare balance sheet. Okay, you will prepare profit and loss account. Then you will prepare cash flow statement. And after that, you will be preparing here a statement of changes in equity. Then you have explanatory notes. So these are the 5 things again you will be preparing with the help of, computers. Yes or no? With the help of softwares. Okay. So that is the point they are saying here. That first you will capture all the business transactions which are having monetary value, and you will be making their journal entries. You will be recording in the books. Now, based on these entries, you will be getting your financial statement preparation, profit and loss, position of the business, everything. Then after that, financial statements are prepared based on accounting standards. Accounting standards means here you will be applying, some rules and guidelines. Like when you are working in bank, you have some set of rules and regulations. Huh? Same when you're preparing accounts, you have some set of rules and regulations. You need to comply with that. Yes. Then various financial reports are prepared from the data available in the financial statements. Not only your balance sheet or this different 5 financial statements, but along with that, you can prepare different financial reports. As I told you, you can prepare stock report. Okay. Then loan report. Yes, FD report, etc. and etc. Yes, so you can prepare these many types of reports as well. Now remember, if your computer can perform all these types of entries, that means here the systems are developed is known as computerized accounting. Yes, if your computer can perform these 4 functions, then you will call it as computerized accounting. Yes, so this is the definition given for CA, that is computerized accounting. Yes, come to the next point. That is computer components. Computer components, basically, when we used to talk about computers, yes, we have some hardware, software, some their computer peripherals. Remember this computer peripherals, they asked once in your PYQ. So this is very important for you, like what are the computer peripherals? So first let's talk about hardware or the physical components of your computer, that is hardware. Yes, software that you are using like Windows or any other, like for Apple we have some different software. So that is your software part. Then computer peripherals, we have printer, video monitor, keyboard, disk drive, etc. So these are the computer components that you need to use. Okay. So just read this point. These are not very difficult points. Already you are familiar with this. Now, next you are going to talk about, that is computer language. Next what we are going to talk about, that is computer language. So first we have computer programs. So a computer accounting system runs based on set of instructions. That is going to be software programs. Like if you are making any entry, Hana, how to process it, yes, in which place you need to reflect it. So someone will make this all, features, or they will make this type of software. That is what software programming. Okay, that is what software programs. How your software needs to behave. That is what software programs. Suppose as soon as I am, paying here through Google Pay, automatically it will be reflected in my bank statement, or automatically I will get one SMS that amount is already debited. So this is the software they have prepared, and that is known as software programs. Next is about programmer, a person who prepares the software. Yes, when you need to debit, when you need to credit, yes, how you need to adjust this credit, everything. Person who develops the software program is known as programmer. Then next is computer software. Instructions of the programmer are in computer language in the form of computer programs. Yes. Then you have accounting software like COBOL, Fox Pro, etc. on an operating platform such as Windows, Unix, etc. So these are your operating windows, and these are your accounting software. Like one of the best example, that is your Tally in your accounting software. So these are your accounting language which you need to use. Now, next, this is now important, which says types of computer. Okay, so you have analog computer, then digital one, and the last one is hybrid computer. So how many types of computers you have? 3. Analog, digital, and hybrid. Analog, digital, and hybrid. Yes, this is your ADH. Just like we have MDH masales. So here you have ADH, analog, digital, and hybrid. So what is the meaning of analog computers? So they are mostly used in scientific and mechanical fields. They process data in continuous form. So analog computers are used in your mechanical and scientific fields. Yes, like if you have any chemical factory. Yes, if you have any construction, not a construction, if you have any manufacturing factory, in that you need to use this type of softwares. Yes, like if you are developing one, let's say medicine, you are a pharma company. Now here you will be using some machines, you will be recording that thing. Yes, that if you are putting 1% of any a unit of any particular, let's say acid or base or whatever it is, you need to put this much proportion of your B unit. So this will make one combination which will help as a cure for any particular disease. So these are the combinations you will set with the help of analog computers. Yes, scientific computers. After that you have digital computers. Digital computers means they accept data, convert them into useful results by carrying out arithmetic operations with the help of computer programs. So basically here what we are doing, here we are talking about your accounting computers, yes, in which you can do accounting. Remember, like if you see Krish movie, I hope you have seen that movie. In Krish movie, they have one lab, and under that lab they used to make some kind of let's say medicines, or let's say they are working on some projects. Yes, so that is what analog computer. But on the other hand, if you see any CA office or any CS office or any accountant office, they have some different computer. Yes, and in that different computer, they are working through their accounting activities. They just like if you are in a finance department, you can understand this point in a much better way. This is known as digital computers. So when you have analog computer, on the other hand, you have digital computers. Next, you will see the combination of digital and analog computers. So digital and analog computers, they are actually the computers which will be combined to create hybrid computers. Yes, hybrid computers means here you have analog plus digital. Okay, analog means here you will see scientific work and digital means you will see accounting work. Remember, accounting will never means accounting A and analog A will never come together. Yes, but DA that will come together. Yes, this is your AD, digital and your accounting. This is your scientific A. Yes, scientific with A. A will never come together. So these are some tricks through which you can remember these points. And remember, when you combine digital and analog, this is going to be hybrid computers, means you can work scientific activities on that computer as well as you can do all your accounting activities as well. So here we complete types of computer. I hope this point is clear, but just remember their name and that definition. In exam, they will be asking, direct questions based on this. Yes. Now, coming to next, that is terms used in computerized accounting. Now, there are a few terms which you need to remember. Okay. So what are the different terms used in computerized accounting? Number one, that is data. Yes, you have, this is the number one accounting, computerized accounting term. Then record, then you have data file and you have system. Data means like suppose if you're passing one entry related to, let's say, FD. So that is going to be data. When you are passing one entry, that will create data. Yes. Now next is about recording. Yes, first you need to identify the monetary value transaction. If you identify, that will become data for you, and now you will record in your books. Yes, you are going to store each and everything in a proper base. That is going to be data file. And under which particular you can say software you will be using, like you are using Tally, Oracle or any other thing, then that is going to be system for you. So these are the terms used in computerized accounting. Yes. Now coming to next one, that is your omni-channel banking, one of the very important term. Yes, even they asked in your PYQ, what is the meaning of omni-channel banking? Yes, omni-channel. Yes, omni-channel banking means this is going to be combination of physical branches as well as your online facility. Yes, like if you talk about SBI Bank, Axis Bank, they have their own physical branches, correct? Along with that, they have their own software. Okay, so that is going to be omni-channel banking. So this provides the same set of services to customers across all channels, whether digital or physical. Yes, digital means that is going to be like for SBI, or you can say internet banking, same for Axis. These are going to be digital or physical. Then omni-channel platform can help improve marketing performances, increasing customer retention, and simplify onboarding processes. So these are the, you can say, benefit they are providing. If you see any elder person, they refer to visit these banks and branches. But if you see, youngsters, or if you are very tech innovative person, then you will prefer to use this, net banking. So this omni-channel banking, is beneficial for both the types of customer. Yes, if you are liking to visit directly to the branch, you can use this, or if you are comfortable with the softwares or any net, then you can use that particular internet banking channel services. So these are the positive points of omni-channel banking. Now one more point which you need to remember, that now users can use all the services through website, mobile app, bank branches, call center, even social media platforms like WhatsApp, Facebook, Instagram, or any other available channel. So this is given under your IFB paragraph. So this paragraph becomes very important. They can ask any MCQ based on this. Okay. So this is about omni-channel banking. Now, next is going to be neo-banking. Now, neo-banking is a very advanced type of banking. Now, they are not having any physical branches. Now, they have all, software. They have, you can say, everything they are doing online. Yes, like neo-banking. Neo-bank is a bank that operates without a physical branch network. They are not having any physical branch network. Banking business is conducted entirely, how they are doing the business, entirely through online. So this is best for tech-savvy people and who prefer managing their money through mobile phones or tablets. Now, what are the advantages? This is simple account and opening procedure and lower cost, because there is no requirement to set any physical branches. You require just your head office or back office, and you can start your banking services. Yes, and nowadays we are preferring for neo banking. So this is all about your computers and their relevant services. Now, what next you need to do? Let's solve few questions based on this. So what is a computerized accounting system? A system that captures business transactions manually. B, a system where accounting functions are performed using computers. C, a system that only prepares financial reports. Or D, a system that ignores accounting standards. So computerized accounting system is known as your B, a system where accounting functions are performed using computers. So right answer is answer A. Next, what is a neobank? A bank that operates entirely through physical branches, bank that operates without a physical branches and conducts business online. Here, a traditional bank with both physical and online operations, a type of investment bank focused on digital assets. Neo-banking, they have entirely, through physical branches? No. A bank that operates without any physical branches and conducts online. Yes, right answer is answer B. Next, who is responsible for developing computer software for accounting system? Accountant, programmer, administrator, or auditor? Very easy, very direct, that is programmer. No. Next. Oh. Right answer here is answer B. What are the physical components of a computer system called? Software, hardware, data, or algorithm. If you're talking about physical components, that is known as hardware. Next, which of the following is an example of computer peripherals? Please tell me. Keyboard, printer, disk drive, all of the above. Yes. So this is going to be answer D, which says all of the